Hey guys, hopefully everyone is doing well. Today's target is to solve question number 9. The chapter which we are related with is cash flow statement, and as usual we have been provided assets and liabilities. The very first step is to see which is opening asset and which is closing. Look at here, 2020 is given on the right side, 2021 is given on the left side. It means 2020 is opening, which is present on the right side. Please note it down very carefully. 2020 opening are given on the right side. So it was the basic thing. As usual, we have been given several assets and liabilities over here. At the same time, first time you can see that whole income statement is also provided in the question. Few adjustments are present, but our performa will not be altered. We will be using it as it is as we were doing in our previous questions. So let's start our question. It is starting from cash opening closing 37 and 54. So we will go to the check and write 37,000 and 54 we will write to the right side because we will wait. This answer closing cash would automatically be arrived if we are doing absolutely same. This is your answer. This answer would be posted over here at cash flow, and what you will get? You will get 54,000. All right. Now next procedure is to see account receivable 26 and 68. So here you will put 26 and 68,000. This was our first entry, that was account receivable. So let's put account receivable over here. System is little slow, so please avoid this delay. Account receivable 26 and 68. The next amount which we are willing to write is inventories. So look at here what it is. These dashes are showing no inventories were present at the start of the period while end was 54. Okay, please listen very carefully. This zero is extra. So 54,000 is your inventory. That is by mistake it has been written. So opening 0 and 54. So here you will write 0 and 54,000. These are your inventories. You will write over here. The next asset we have is prepaid. Yes, it would be taken 6 and 5,000. So you will write 6,000 and 4,000 over here. These are your prepaid expense. Prepaid expense. Next entry we are looking forward is land. From land to accumulated depreciation. All are fixed assets. Land, building, equipment. We will see them little later. The next step is to see liabilities. Account payable 40 and 20. Here you will put first 40 and 23. These are your account payable. Yes, these are your account payable. So you are going to write it as it is. Account payables. The next is accrued expense. Accrued expenses are outstanding expenses which are liability starting 0 and 10,000. All right, 0 and 10,000. These are accrued expenses. These are liabilities. Now from here, after accrued expenses, you have bonds payable, common stock and retained earnings. All of these three are long term. So it means current side of our cash flow has been completed. We will now be posting fixed assets and fixed liabilities, but before that we will complete our adjustments. One very important thing you are looking at is this income statement. So first time income statement is given, but the only amount which we are related with this answer 125,000. This is answer for net income, and that would be our profit for this question. Here you will write 125,000. Now please note it down. There is nothing else which is important for us. And there are few points which we will discuss later on. Depreciation, non-cash expense added. So here you will add 33,000 because it's your non-cash expense. Then we have land was sold for its book value for cash. We will see what is happening. Here you have the land. Book value was 70 while you have closing value 45. What does it show? That you have sold your asset more than current value. Look, old value was 70, current value was 45, but you have sold it at book value, that means 70,000. It means extra amount you have received. Cash received mean plus, so you will write over here how much extra cash, 70,000 minus 45,000. So you have got 25,000 after sale of land. Please note carefully, and I'm requesting to repeat it. Old value was 70, 2020, and current value was 45. And you have sold it to the book value, that means 70,000. So difference is your profit. Difference is extra cash you have received. That is 25,000 and you have posted because extra cash you have received. That is why it is adding. Cash is increasing. The next adjustment we are looking forward is cash dividend, which is paid. Please underline this word, paid. So cash dividend is paid. It means cash is decreasing. Dividend is the part of profit which is distributed among shareholders. It is related with share capital. That is why we will choose liability. And since dividend is paid, it means we will choose this less. We have paid dividend. I have asked you to underline. So 55,000 is paid. You will write over here because cash is decreasing. Equipment which cost 166 was purchased for cash. Okay, we have purchased equipment for cash. Cash is decreasing. Equipment is asset. So you will come over here, equipment, and we have purchased. It means 166,000, cash decreasing. Here we have equipment with the cost of 166,000 purchased. So there is decrease in cash of 166,000. Next step is equipment with the cost of 41, book value 36, sold for 34,000. It means you have received 34,000 as cash. This is your sale. The next thing, please note, the value was 36 but sold 34. It is unfavorable. We will not be happy to see this situation because an asset of higher value has sold for lower value. So difference of these two, 2000 is loss. Loss is non-cash and non-cash is added. So 2000 would be added over here. Loss on sale of what asset that was? I have to see equipment. I was writing equipment, but suddenly I realized I will have to see it again. Okay, 2000 we have done. Now what we have done, 34,000 plus and difference of loss. Loss non-cash, 2000 added. Bonds 10,000 were redeemed. Redeem mean these bonds are payable. When you will redeem, it means cash would be paid. So 10,000 would be written over here in decrease column. Bonds payable mean you have paid your cash. And why we are writing bonds over here? Because bonds payable are liability. So in this way our adjustment number 5 is completed. Common stock 130,000 issued for cash. It means cash to capital. Cash is coming in, 130,000 increasing, and capital is liability. So to increase, you will choose add column, and how this was your issued capital, we'll write over here. All adjustments are completed. Now we will see what assets are left. Okay, cash return, account receivable return, inventory return, prepaid return, land is also written. Please note it down. Look at here. Land has already been adjusted. After land, we have building. Building 2 lakh, 2 lakh. This was not written before. So we are going to write building over here. 2 lakh was at starting and 2 lakh was at end of the period. After building, we have equipment, and you can see that equipment has already been adjusted. This is your equipment. Okay. Then after equipment, assets are ended. Account payable already written, accrued already written, bond payable and common stock or capital. Look at here, bonds payable and capital has already been written. Retained earning means amount is still in your hand. Nothing is going out or coming in. It means all assets, either they are fixed or current, have been written. All liabilities, either fixed or current, has been written, and all adjustments are completed. So we are going to make sum of opening, sum of closing, sum of opening liabilities, sum of closing liabilities. Then this profit we will take and will add opening asset, subtract closing asset, subtract opening liabilities, add closing liabilities, and we will get 17,000. Finally, we have put this 17,000 over here, and look at here. Automatically same answer we have derived 54,000. So in this way, guys, our question has been completed. I am sure that you people have understood. It is requested to please practice this question for more than 2-3 times. And after practicing, if you are feeling anything difficult, you are very open to share your question through messages, text, or you can ask directly by meeting. And I will try my best to answer your queries instantly. Thank you very much for your time. It's time to end our lecture and it's time to say goodbye. Allah Hafiz.